Good morning, traders. It is Wednesday, January the 17th. Taking a look at the charts, we got the SPY ETF. This is the daily chart, and we got our overlaid market biased cycle analysis on here. Now, overall, yesterday we had a pretty big gap to the upside and a sell-off, more or less a reversal candle. Not a super strong one, but a sign that we are getting short-term overbought and the market is selling off. Now, what we want to show here is simply we've got a downward bias more or less for the next couple of weeks in the market. Now, the key thing here is the overall cycle skew. So let me just show you when we've got a cycle moving up and we're in a bull market and our trend indicator is green and trending up. When we've got an upward cycle, that's when we see these strong pops in price. And when we get a negative bias in the market, we see price narrow and kind of grind its way higher until you get another cycle low. And the cycle lows are where we get these strong pops. You can see we had a strong move to here. We had a strong move up into here. So where we're at now is a downward bias, which simply means the market could chop around sideways, or it could continue to channel its way, grind its way higher until we hit this cycle low over here, and then we could see it have another pop in price, and then we could see it consolidate more. So overall, we're not expecting a big sell-off. There's no doubt there could be a sell-off, but the bias regularly here when we've got a downward move is simply that the market's the channel, the range that it trades, kind of trades sideways and grinds its way higher, and we get into this type of potentially choppiness in the market where it consolidates for a while and then goes back into a slow grind higher. So overall, in the grand scheme of things, we've got a little bit of a topping candle. The reversal yesterday in all the markets has kind of updated the cycles to be more of a that standing out as a somewhat significant pivot high, and we're probably going to see some weakness or slowed growth at this point until we get to a new renewed cycle low in the market. Now, if we take a look, here is the 30-minute chart. And what we're looking at here is simply, this is a 30-minute chart overlaid over the last week and a half or so. And what we're looking at here is simply we had a cycle low move to the top, and we had a nice move up in price into this area. In the last couple of days, we've seen more or less the longer term cycle kind of pull back. It's more or less flat lining up here. And yesterday we were expecting a gap to the upside, which we had a big price gap. And we had a downward bias in the market with a little bit of an intraday bump and a continued downward move. Overall, the bias yesterday was to the downside, and our longer term cycle analysis was also to the downside. And of course, the market gapped up to this 1800 level we talked about in pre-market. 1800 likely get tagged, and then it's going to act as a resistance level, and we're going to see some selling. And of course, we saw that. We saw the market gap up. Eventually, it sold down, had a little bit of a bounce, and kind of traded sideways, held its ground during this stage right here. And then the downward move continued, and we came down, and we more or less have somewhat of a cycle low here. We have two different cycles here. We had kind of a reversal bar here, and it ended up having a strong pop. And believe it or not, there's a moving average, the 5-day moving average. It came down, and 5-day typically acts as a support zone, just as the 20 does. This came down, hit the 5-day. We actually had the cycles bottoming out. We got into oversold short-term intraday, and we had a nice bounce. So there are a lot of things came together yesterday as a day trader. Not that we are a day trading service, but we provide this type of analysis in the videos so you can take advantage of it going forward. So that's what unfolded yesterday. And what we're looking at today, let me just move the cursor to, so this is more or less today's expected price action. If we just zoom in a little bit more here, today's bias, we actually have to the upside on the very short term and a bit of a longer term cycle. We also have an upward bias. Today, stocks are set to gap higher already. And the fact that it's already gapping higher may negate some of this upward move. But overall, the bias today is more or less higher price than where we were yesterday. If we look from yesterday to where we are, the overall bias today is higher. And from yesterday, the longer term, it's relatively flat, slightly higher. So from yesterday's close, probably going to see the market move up a little bit by the end of the day overall. Again, we're having a gap today. I wouldn't be surprised that gaps tend to get filled if we see a little bit of a pullback, fill the gap, and into this top here, and potentially just kind of grind itself out for the day. So that's where we stand for today's bias. And if we zoom out a little bit further to get a little bit more of a bias of where the overall market is headed. You can see we do have, from where we are more or less yesterday, we do have a bit lower prices going forward over for a cycle low. So our short-term intraday chart here and our daily chart cycles that I showed you a moment ago are pointing to lower prices. Today we have a little bit of a pop up, but we could very easily come down for an ABC correction, and which would be an ABC correction. And if we were to just throw a Fibonacci extension on here, to give you a rough idea, we can go from the high down to yesterday's low, and say the market gaps up to the 1790 area, somewhere up here where I think it's trading today, and we just move that forward. So if that is where the market is going to move, we could see this here sell down. We see it bounce up, trade somewhere into this area. This is going to find support at the 618. If it bounces at 618, we should see it hit the 100% measured move down around the 2748 level. So that would give us an ABC correction. This level down here is also going to be an oversold condition. Depending how it sells off, it could be very similar to what we saw actually right. Let me just zoom out a bit here. It's hard to see, but more or less, if we get down to this box, it'll be a setup very similar to what we had over here, and we trade the QQQ for this pop. We took the first rally, took the first move here and played it, got out, and we saw the market continue to stretch a little bit higher. Now we're getting the gaps to the upside, the gap higher and reversal. So we're getting into this kind of topping phase right up into this area, which is where we got out. So this will act as a support zone back down into here and give us a potential setup. Now, taking a quick look at the other markets, this is the Dow, the DIA. Obviously, yesterday's pop and reversal is helping change the cycles going forward. A reversal bar changes the analysis somewhat, and the Dow is showing lower prices. Let's take a look at the NASDAQ. NASDAQ overall cycle should be having a neutral to a downward bias as well. And small cap stocks, they actually are still showing a continued move up, which they haven't really changed from yesterday's analysis. Overall, though, if the rest of the market is struggling, we're probably going to see the Russell 2000 struggle as well. You can see there's a bunch of jig jags in here. That means every time there's a pullback in this cycle analysis, it means there's other cycles pulling against this longer term wave count. So we're going to get into some choppiness in the market, I think, going forward. Taking a look over at precious metals. Precious metals, we're finally starting to reach this this pivot high here. We're another day or two away from this, and then we could see a downward bias. And I think a good chunk of that is because of the U.S. dollar, which is lining up for a bounce. You can see we're getting oversold in the dollar. Really big volume here. Usually big volume kind of tags the reversal point. So we're looking for a bounce in the dollar, which would put a downward move on commodities and precious metals. So take a look at another commodity here, crude oil. You can see cycles here. They updated with more or less this chatter and price action, looking like we're going to start to get a downward bias in crude oil. And you could argue here it might be forming on a very short-term basis a little bit of a topping formation. Intraday wise, price ran up, came back down, ran back up, came back down, forming a little potential island top, a double top, and we could start to see this pull back and fade down in time here. So that's where the markets are in general. If we take a look at the VIX had a nice pop yesterday. It was a pretty good drop in the equities market overall. We saw the VIX pop up higher. And the VIX is looking like it's at the normal upper trading range. So we could see this kind of fade back down today. And if we do have that finish kind of sell off low in the next day or three, we could see the VIX maybe potentially pop up a little bit higher. But overall, the VIX is kind of trading up at a level where it typically fades back down. And yesterday with the VIX as high as it was, that's a sign that the market did cleanse itself. Ideally, I'd like to see equities pull back into that ABC correction and get oversold for a new entry point versus it continuing to rally from this point forward. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.